Hi guys, trust you're all having a great day. I'm Witty or Witty FX, as some of you may know me. And then yeah, you're welcome to this video session. Actually, I'm going to be talking about something quite different today, other than the daily market reviews I usually do. And this topic is quite a challenging topic, and that's how to create a complete trading plan. Now, I've been getting so many traders contact me, chat me up, asking me this, that about strategy, why it's not working for them, risk management, and the likes. And even though all of those things are actually very important in trading, I realize it all boils down to your trading plan. So many traders don't have trading plans. Now, the issue is so many traders feel if you have the perfect strategy, you're going to make money as a trader. And so many traders dive into this so-called research on the perfect strategy. And even though some traders already have come to that conclusion that there's nothing like the perfect strategy, so many people still feel their success or the failure of them as a trader is dependent on the strategy you use. And the truth is, literally all strategies work. In fact, I'm yet to find a strategy that you can't use to make money. However, the issue now is no matter how good the strategy is, if you put it in the hands of a bad trader, is definitely going to find a way to lose money with it. And that's just the truth. So the thing is, as a forex trader, you are an entrepreneur, right? However, the difference between the regular entrepreneurs and forex traders rather, is entrepreneurs usually go into business with a plan. However, you ask the average forex trader, do you have a plan? If not even a plan, do you have a journal? And you realize the average forex trader doesn't even have a journal, and this is the wrongest approach to trading. So today we're going to be looking at steps to create your own complete trading plan. Now, just like an entrepreneur or business owner, first wants to go into a business and first of all does his research and then creates a business plan around the business, which is basically how he intends executing his business activities, including marketing, sales, profit sharing, customer acquisition, production, and everything. Now, that is exactly what your trading plan is going to be like for you as a forex trader. So your trading journal should include everything that you carry out in your trading as a business. Now, trading is not an hobby. However, some people take it as an hobby. However, if you want trading to make you money like a business, then you have to treat it like a business, which means you need to have a trading plan or a business plan, so to say. So basically, in your business plan or in your trading plan, that is where your strategy is also going to come in. However, strategy on its own is not a standalone concept to enable you become a profitable trader. There are so many other things into it. And then a complete trading plan should be so simplified and should be so how would I put it, should be so straightforward and so detailed that even someone who is not a trader, who sees your trading plan, should be able to literally repeat what you do in the market. And it should give you a clearer picture or a clear picture of exactly the steps you take in trading. So without taking much of your time, let's get straight up into it. So basically, the first thing is your what. Now, so many traders focus more on strategy, like I said. However, for your trading plan, the very first thing is to determine what exactly you trade. Do you trade forex major pairs? Do you trade minors? Do you trade pound pairs? Do you trade yen pairs? Do you trade euro pairs? Whatever, what do you trade exactly? Because every forex pair, every forex currency pair have their characteristics. Do you trade exotics? Do you trade indices? Do you trade energies? Do you trade gold? Energies include oil, oil, gas, and the likes. And then gold also could include maybe platinum and the likes. Is that what you trade? Now, there is a reason why it's always better to focus on certain pairs and not just trade everything, because in this business it's very easy to be jack of all trade and master of none, most especially if you are a new trader. However, for new traders, it's advisable start with, in fact, for me, I advise my students to start with one currency, not one currency pair, but one currency, which means if you're trading, say, Canadian dollar, then you're looking at Canadian dollar across board. Dollar card, pound card, euro card, card yen, card chef, everything card across board. If you're looking at dollar, then you're looking at everything dollar, dollar chef, dollar pound, euro dollar, dollar yen, everything dollar. Now what this does, it helps you build mastery, and mastery helps you build confidence and definitely ensures profitability. So firstly, in your trading plan, I advise you to select the forex pairs you want to focus on. Now, you don't necessarily need to focus on just one currency, like I do advise my students. You could decide to, okay, I'm focusing maybe on just pound pairs and yen pairs, however you like it. However, what I would advise is focus on certain pairs. For me, I focus on just the majors, excluding dollar chef and dollar yen, and I trade exotics, ZAR, TRY, MXN. I trade indices, and I trade gold and oil also. But however, I didn't just wake up one day and grow into that. So what happens is, the more you master these pairs, you then can start including newer pairs and adding up to the number of pairs you look at. So first of all, understand your what exactly are the pairs that you trade, and have that at the back of your mind. Now, what this will do for you is it will help you maintain your discipline, and the more you trade certain number of pairs or certain specific pairs, you get used to them. You literally know what they're about to do. It's very easy for you to read the markets, unlike when you're monitoring so many pairs. And then the funny thing is, so many traders feel the more pairs you monitor, the more opportunities for you, and that's very wrong. Because in my experience as a new trader, most especially if you're not using tools to your advantage, such as alerts and the likes, to actually monitor these pairs, you realize you're looking at so many pairs, and at the end of the day, you miss so many opportunities. So my advice, focus on fewer pairs, understand them, and let's start from there. So number 2 is your where do you trade in terms of the platform? Is it on mobile, is it on PC, or rather do you just use alerts? Now, in terms of platform, back when I was just starting in the business, I realized whenever I do analysis on my phone, it's usually incomplete. So most of the time, it's usually like a gamble. And some of you might be facing the same challenge. So if you know you are better analyzing on your PC, whenever you feel that urge to trade with your mobile phone, why not just calm down? Because your trading plan already tells you where you like to pick your trades from. Alternatively, you could probably just set alerts, and you analyze with your PC, and whenever the alerts trigger, you could then pick your entries on your phone, however you like it, if you're maybe someone who is always on the move. And then your second way is home. Do you trade from home, or do you have a 9 to 5 job and you sometimes trade from work, or are you someone who is very busy and is all about during the day? Now, what this will help you do is you start mastering and understanding where you trade the best. For some people, when they are at work, they have less time to look at the chart. So when they look at the chart, it's more like they are in a hurry to place a trade. Now, the truth is, placing a trade does not guarantee profits. Making right trading decisions is what guarantees profits. So you need to understand where you trade the best. If you trade better at home where you are more relaxed, then fine, do that. If you trade better at work when there are so many people looking at you and you feel that need to impress them, and that is when you actually get everything, and that is when you are in your zone to actually make money, if that is what works for you, then know that fine, when you're at work, that is when you trade the best. So you need to take note of what platform you're going to use to trade, what platform you're getting more used to, and whether you're trading from home or work. Well, by God's grace today, I also I trade mostly with my phone, because it's handy and it makes the job much easier for me. I move around a lot, and then I trade both at home. I actually don't have a 9 to 5. I'm an entrepreneur though, but these are steps I wish I had known when I initially started, because then I realized trading at home when I'm alone, I'm more of a lone ranger kind of trader. So when I'm alone, that's when I actually trade the best. So you guys, part of your trading plan, after understanding your what in terms of what pairs You should understand where you trade the best and what platforms you use to trade the best. Now the third one is in terms of your when in terms of what days of the week are your most profitable days. Now if you do your analysis and you realize that most of the time your Tuesday trades go well the most, or you realize that most of the time you make most of the money on Mondays and on Fridays, then why not focus on just those 2 days? Because so many traders have that urge to always want to place a trade, and that is what gets the fingers burnt the most. So record and understand what day you trade the most and let that be part of your trading plan. For me, I don't even trade on Mondays. So on Mondays is when I even rest the most. Because I realize most of the time on Mondays, market is usually slow and there are usually so many trap moves. And then on Fridays, I close trading early. Anything from 3 p.m. I'm done trading on Friday. So understand what days of the week are your most profitable days and focus more on that. And if you're someone who likes to catch midweek reversals, that means you trade mostly on Wednesdays, Thursdays, fine, focus more on that. However, let it be in your trading journal, or let it be part of your trading plan, so you know what days exactly you should be looking at your charts. And then time, what session works best for you. This could also be a determinant on your local time zone, as well as your work balance, your work schedule rather. What works best for you? Do you like to trade London session? Do you like to trade New York session? Or are you only available in Asia session? So whichever one you are more available in. If you're someone who in your time zone you should be sleeping during London session, and then you strain your eyes, you stress yourself coming back late from work, and then you still have to wake up in the midnight because you want to trade London session, it's very possible at that moment your body is stressed, you won't be making the right trading decisions. So also evaluate the time when you are most active, the time when you are most effective. Yeah, effective is the word. Understand the time when you are most effective, and that is the time that should be in your trading plan to actually be on your charts. And then your state of mind. For so many of us, in fact for I myself, starting up as a trader, I realized I was more profitable whenever I am encouraged, or whenever I'm excited, or whenever I'm motivated. However, my mentor told me something. He said you won't always be motivated. That is why you have to be disciplined. And then come today, I realized whatever mood I am, I can understand myself and know what to do. So make your trading rather technical, rather mechanical. Mechanical in the sense that you literally don't have to think about any trading scenario. You already have a plan for everything. And how to get that plan is part of what we're talking about today. So understand your state of mind. For some people, as soon as they are sad, they make they make the wrong trading decisions. So understand what state of mind, what mood you are that makes you trade the best. So when you are in a state that makes you make a lot of mistakes, it's best to stand down. So your state of mind definitely matters. And as you keep growing as a trader, definitely you grow the discipline. If you have a mechanical approach to trading, then your state of mind at a point won't even matter. And then if your trading is centered more around news, if you know that you make most money when there's high impact news, then why not focus more on when there's high impact news? On Sunday night, just before the market opens, you check Forex Factory to note when the news is going to be out, and that is when you focus on trading the most. And if you're someone who news always messes up your trading, so you plan ahead of the week. You could probably set alarms maybe an hour before the news, so an hour before so time on so day I'm not supposed to be trading. So plan your trade along with the news also, if news affects your trading. For me, I don't really look at news because it doesn't really affect my trading. Most of the time it usually improves the speed at which my trades move the best, so I don't really look at it. However, if your trading style includes looking at the news, then definitely add it to your plan, and at the beginning of every week, plan it ahead of time, so the market and the news doesn't just catch you unawares. Sorry, I have to take a glass of water. And then number 4 is your why. Now this is where your strategy comes in. So if you realize, before we even talk about strategy, we need to first understand what pairs we trade, where we trade the best in terms of what platforms, our analysis are based on. If you can trade with mobile, fine. If you can trade with PC, fine. If you trade better with only PC, fine. If you just set alerts and you don't really even monitor your charts, even much better. If you trade better at home, or if you trade better at work, or when you're out, notice which one works for you and focus more on that. And then your what day of the week is your most profitable day, what time session is the most profitable session for you, and then what state of mind do you make the best trading decisions, and does the news affect your chart. So all this has to be in place before you now finally even focus on your why, which is where your strategy then comes in. Now for the why, we look at three things. The market cycle, first of all. Does your strategy give you entries in accumulation phases, or in breakout phases, or in reversal phases, or in trend phases? For so many of us, for so many traders rather, we just learn a strategy and expect it to work across board on all market cycles. Now, market basically has four cycles, which is the accumulation or the consolidation phase, which you could also call the range phase, and then the breakout, which is when market breaks out of a range. It could be a false breakout, it could be the beginning of a trend, and then there's the reversal phase. Take for instance, market is already in an uptrend and then market is reversing to start a downtrend. Is that when your strategy works the best, or does your strategy work the best when market is in a trend? So you need to understand what market cycle your strategy works best for. So if you have a strategy that only works for maybe breakout phases and trend phases, then whenever market is in an accumulation, or is in a range, or is at a reversal zone, you definitely shouldn't even be looking at your charts. So you should understand the rudiments behind your strategy. For me, I have a strategy for continuing with the trend, and I have a strategy for reversal, and I have a strategy for consolidation. However, I prefer my reversal strategy and my trend continuation strategy. For breakouts, I don't really do it. For trading within the ranges, I don't really do it either. And that is what works for me, and it's part of my trading plan. So know your why, know what market cycle you trade best, and put that down as part of your trading plan. And then the conditions. Now the conditions is more of the strategy exactly, in terms of do you focus more on indicators as your priority, are candle patterns your priority, are chart patterns your priority? Whatever it could be, that is where the strategy itself comes in. For me, I only use TDI indicator, and I focus more on candle patterns and chart patterns. For some people, they probably combine a couple of indicators, and that is what your strategy does. So if you are a trader who uses maybe the RSI and the stochastic, the day someone comes to meet you with maybe the TDI or whatsoever other oscillator, you definitely shouldn't be looking at it, because it is not on your trading plan. So know what works for you, know what's on your trading plan, and focus on that. Focus on that, guys. Now, what this will do for you is it will help you to stop jumping from strategy to strategy to strategy. Because the truth is, for so many of you who have strategies, who think the strategy is the problem without realizing that you, the trader, is most likely the problem, you realize there are other people who are using similar strategies, or probably even exactly the same strategy. However, they are successful with it. And that is when you should start wondering, what exactly are they doing that you are not doing? So you realize they are probably consistent with it. Now the truth is, the proficiency of any strategy is dependent on the consistency of the trader using it. If you're a trader who jumps from strategy to strategy to strategy, you definitely will not be profitable. It's just like a businessman who jumps from one business to the other to the other. Definitely, you don't give the business time to develop. You quickly give up, and then you look for a new business. Business isn't run like that. So why should trading be like that? I mean, imagine if Steve Jobs had given up on Apple, say maybe 6 months afterwards, or the guy who developed the light bulb, say if he had given up maybe the fourth or the fifth time, would he have come out as the inventor of the light bulb? So that is exactly how trading is. Be consistent with your strategy and keep developing on it. That's part of the number 4, part of the whys. That's where your strategy comes in. And then your confirmations. Now, after your strategy is in place, you've seen why exactly, in terms of, okay, your RSI is maybe above 70, below, whatever, however you look at it. Maybe you've seen a candle pattern, a star formation, a railroad. Now confirmations are also like confluences. As a trader, I believe we should work more with confluences. One tool, one indicator should not be enough to conclude on your trading decision. So other things that could influence your trading decision are probably correlations, fundamentals, maybe the market cycle or whatsoever. So all those things under your when and your where and your what also make up part of your strategy exactly. So you've seen the candle pattern. If you notice that, okay, most of the time when I'm take for instance, if you are someone who trades mostly reversals, you realize that the most effective reversals usually happen across board on correlated pairs. So if that is the case in your trading style, then why not add it to your trading plan? And then know that whenever you want to trade, after seeing all your conditions met, you need extra confirmations. And if you're someone who combines fundamentals with technicals, then definitely technical confirmation is necessary. And if you're someone who understands the market cycle you work with already, it's not enough for XYZ to have been confirmed in your conditions to place a trade. However, the market cycle, fundamentals, correlations is also in place because you need as many confluences as possible to make the right trading decisions. So under your strategy, you should look at what market cycle works best for you. What are your conditions exactly? What do you need to see to decide if it is a buy or a sell? And then what other confluences make your trades go better? And then number 5, I think that should be the last. We have the how. Now your strategy is different from your how. How now depends on entry strategy. Are you someone who always places instant executions? Are you someone who uses pending orders? Are you someone who has to wait for pullback? So understand which one works best for you, and that should be in your trading plan. If you're not someone who is good with using pending orders, because someone else uses it doesn't mean you should also use it. So understand what exactly your entry strategy is. Do you use pending orders? Do you use instant executions? After seeing your confirmations, do you wait for the first pullback? Maybe you use fib retracements or however you like it. And then what is your exit strategy? Now this exit strategy comes in 2 ways. Your conditions for placing a trade in the first place should be broad enough to also tell you when to get out. However, for most traders, you only know when to enter, you don't know when to exit. So you should also understand when to place the trade and when not to place the trade. And in fact, if you are already in a trade, you should know when to exit the trade. And then exiting the trade also should have its own tactics. For me, if I place a trade and I lose confidence in that trade, I could either just break even and leave it to ride, or I could partial close. Take for instance, this week I sold odd yen, and then I saw it reversing, and I was almost too sure it's probably going to give me another re-entry next week. However, for that reversal, I don't know if it's going to hit my break even or not. So what I did was I partial closed, and I'm looking for another entry to still continue selling. So that is in my trading plan. If your trading plan is soon as you lose confidence on a trade, you close out totally, then fine, include it in your trading plan. And what this will do for you is it will make everything mechanical. So soon as you find yourself in that condition, instead of you wondering what exactly to do, look at your trading plan. What did you set out as your rules to do to exit a trade you lose confidence on, or to exit a trade you realize you entered impulsively? And in fact, if you're disciplined enough with your trading plan, you realize you don't trade impulsively no more. And then per trade, you should understand what your risk to reward should be. Do you depending on the market cycle? For me, there are certain trades. If I'm taking a trade at a peak formation, then I do 1:4. If I'm taking an intraday trade, I do 1:2. So you should understand what your risk to reward should be per trade on the kind of trade it should be. Not that some trades you're doing 1:2, some trades you're doing 1:1, and I don't even advise 1:1 for some reasons. It doesn't actually make a lot of sense, because most traders focus on win-loss ratio. However, it's more profitable to focus more on risk to reward, because with good risk to reward ratio, you realize you can actually take more losses than wins and still be a profitable trader. So I advise you guys to focus more on risk to reward than win-loss ratio. So your trading plan should also include your risk to reward depending on the type of trade, and also your lot size. What risk are you taking per trade? If I'm taking a reversal trade, I risk little of my capital. However, if I'm continuing with the trend, I risk more of my capital. So your trading plan should also contain what lots exactly you're going to use per the entry you take. So it makes the job much easier. You literally don't have to think to execute your trades because you already have everything written down. And if you're having problems calculating your lot size, you can download the app Stinu. The name is over here, Stinu, Stinu. It helps me a lot. In fact, that's literally what I use. So that will help you with your lot size. So if you have all of this in place, your what pairs you trade, where you trade the best, what platforms you trade the best, what days of the week, what time, what session, the state of mind, does news affect your chart? When you have all this in your trading plan, it makes everything much easier. And then your strategy, your why. Do you trade ranges the best? Does it work best in reversal modes or breakout modes or the trend modes? What are your conditions? What are extra confluences or confirmations you look out for? And then how exactly do you enter? Do you enter with instance? Do you wait for pullbacks? Do you partial close when you lose confidence, or do you partial close after your trade has moved certain number of pips, or when exactly do you break even in a running trade? And then your risk to reward depending on the kind of trade or per trade, and then your lot size per trade. So that's just it. Now after getting all of that, that is when your goals should now come in. However, for many traders, you come into the market with two things: strategy and your goal. Strategy and goal. And I think that is one of the wrongest approach because there are so many things to it. So if your goal, personally I don't advise daily goals in the market because that puts so much pressure on you as a trader to take wrong decisions. So I don't think you should trade every day if you don't see your confirmations. I believe more in looking at setting goals per month, maybe quarterly, biannually, annually. And however, you could set goals weekly also, that's also fine. But daily, I think daily puts too much pressure on you as a trader. And then my mentor told me something. He said I should take the 20 trade challenge. Now what I realized is this actually helped me a lot. So try it. Take 20 trades and follow your trading plan to the bone and see whether you come out profitable or not. When I say follow your trading plan to the bone, in other words, trade only on the right day, trade only those particular pairs you set out to trade on the right day at the right session, using the right risk management with the right confirmations, the right confluences in the right market cycle 20 times, and try not to trade impulsively or do any form of emotional trading, and see how that works for you. So that could also be part of your trading goals. Maybe I'm taking only 40 trades per week, or maybe 40 trades per month. That could also be a trading goal. Or probably for some of you who are more experienced, who like to flip accounts, so maybe you want to grow, say $2,000 to $10,000. That could also be a goal. However, I don't really advise it because most of the time traders who do that tend not to respect proper risk management. And then if you have all of this in place, you realize it gets easier to be patient in running trades. Reason being that you already know what to look out for to exit the trade. You already know how to exit the trade. And you are patient also in waiting for the trade because you know the conditions, the market cycle, everything in place before you even place a trade. And then it's when you keep doing this and you keep saying yourself being consistent, now focus more on the process than the profits, because at the beginning, till you get used to it, you might not be seeing as much profits as you want to till you get more used to your trading plan. But focus more on the process, because it's the process that ensures repeatability, that ensures profitability. So focus more on the patience. So the pros of having a complete trading plan, it will help you build your patience, it will help you build your confidence, and definitely you follow the right risk management that you had stated down there. Because some of us, you realize you could actually take so many trades for the week which are actually winners, and at the end of the week you lost everything due to poor trade management. So your trading plan will help you place the right trades, will help you stay out of the wrong trades, will help you manage your trades properly also, and will help you protect your capital. So your trading plan is literally all you need to be successful as a trader. And then let me give you a few tips for your trading plan. You could actually use an Excel sheet. I do use an Excel sheet, or you could maybe use a diary, or in fact I learned of some guys who use Telegram channels. So they created a channel for just themselves, and then they posted everything. They posted their trading plan there and pinned it. So per trade, all they do is they fill in the blanks and then type it. So I advise you guys, have a trading plan and journal your trades. Journal is very, very necessary, because that is the only way you can evaluate your trades. And then take snapshots, take flashcards. It's very necessary. I have a lot of them myself. If you're on my Telegram channel, you see I do post flashcards and snapshots regularly. I take snapshots on my mobile phone, and also I prepare flashcards on my PC also. It helps you keep seeing the same things over and over. And one thing is, if you get used to a particular pattern, it gets difficult to unsee it. So that's the advantage of taking snapshots and flashcards. So when you see that same thing play out in the markets another day, you can definitely refer back to the snapshot you took previously, rather, and know how exactly you did what you did. So one thing snapshots will do for you is the market repeats itself consistently. So the snapshots will help you build confidence also. So I advise you guys, take snapshots of all your trades before you place the trade, after you place the trade, and after you exited the trade. And then if you need to test your strategy, you could use a trade simulator instead of going on demo, because I advise, if you can go on demo, fine. However, if you're someone who demo trading doesn't really do it for you, then probably you could use a trade simulator to fast track your strategy testing process, and then maybe go on a live account with very little capital, maybe $100 or so, to actually test yourself. And remember to take the 20 trade challenge and follow all your rules for those 20 trades and see how it plays out for you. So you could check fxblue.com. They have a very nice trade simulator. I also used it a while back and it works very well. So another way you could ensure accountability is to have a trade partner. I mean, if you have a trade partner who you share ideas with and who knows everything you do as a trader, it makes the job much easier. So the two of you can grow together. Yeah, even the Bible says, "Can two work together unless they agree?" So that works also, having a trade partner. And then for accountability's sake, you should also connect your accounts to account metric apps and websites such as MyFXBook. I know MyFXBook also has a journal app that you could use, and other account metric apps. Yes, guys, so that brings me to the end of this training. So I promised I was going to do it, and I finally delivered. I initially wanted to do it on Twitter, but I didn't want to go through the stress of having to type. So quick recap: to create a complete trading plan, understand your what pairs you trade exactly. Now, if you trade indices, they move they move better rather in New York session. So you should understand the characteristics of all the pairs that you trade, and then focus on just the pairs you trade. Understand what platform works best for you, where you feel comfortable trading the most, when you trade, the day, the time in terms of session, your state of mind, and if the news or even what news affects your trading the most. And then your why. Do you trade better in certain market circles? What are the conditions you look out for to trade, and what are other confirmations you look out for? And then your how also. How do you enter the market? How do you place the trade? Is it instant? Is it pending? How do you exit? How do you manage the running trades also? What's your risk to reward per trade, and what's your lot size per trade? And also set your goals. Do you want to grow your account by 10% weekly, monthly, however it is? And then be disciplined enough to follow your trading plan. And then the pros, definitely to help you develop confidence, patience, and proper risk management, and learn to journal all your trades. In fact, your journal should even contain all the elements of your trading plan, everything. So you just fill it up per trade, and even your journal could tell you when to place a trade and when not to place a trade. So I'm also going to post a journal right down at right below. I'm going to post the link to download a journal. Hopefully I get that set up, and then you guys could check that out. Yeah, it worked for me, and however, that's not the journal I use anymore. But for some of you who don't have a journal, check out the link, and you could use that. So if you need to contact me, feel free to send me an email, wittyfx@gmail.com. Witty is WITTEEFX@gmail.com. Or you could contact me on all social media: Instagram, Facebook, Twitter. Search for WittyFX, and I should be sure to reply you as soon as I can. However, I am most active on Telegram. So if you also want to join my Telegram channel, the link is down there. Search for Witty and join my Telegram channel. That also works. And please make sure to subscribe to my YouTube channel and help share this video. So let's help as many traders as we can. So that's it from me for today, guys. Thank you so much. Have a wonderful day. Have a wonderful trading plan ahead.